Welcome to FXTech's Nzd Usd Analysis for October 6th to 11th, 2025, prepared on October 13th. This week saw significant volatility in the New Zealand dollar as trade tensions escalated and the Reserve Bank of New Zealand delivered a larger than expected rate cut. We'll examine the technical setup, key fundamental drivers, and provide actionable trading strategies for both short and medium-term horizons. Let's dive into the analysis. Nzd/USD is currently trading at 0.5758, down 1.82% on the week. The pair has been under significant pressure, falling from a weekly high of 0.5860 to a low of 0.5720. This represents a 140 pip range and reflects growing concerns about New Zealand's economic outlook. The Reserve Bank of New Zealand cut rates by 50 basis points to 4.25%, exceeding market expectations. Additionally, escalating U.S.-China trade tensions with President Trump threatening 100% tariffs on Chinese goods have weighed heavily on commodity currencies like the Kiwi. From a technical perspective, Nzd/USD is showing clear bearish momentum. The RSI at 38.5 indicates oversold conditions, but hasn't yet reached extreme levels. The MACD histogram is negative and expanding, confirming downward momentum. The pair is trading below all major moving averages, with the 50-day MA at 0.5820 and 200-day MA at 0.5950 acting as resistance. The 14-day ATR of 0.0065 suggests elevated volatility. Key support lies at 0.5700, while resistance is at 0.5820. A break below 0.5700 could accelerate selling toward 0.5650. Three major news events shaped the market this week. First, the RBNZ delivered a 50 basis point rate cut, larger than the expected 25 basis points, signaling deep concerns about economic growth and inflation undershooting targets. Second, U.S.-China trade tensions escalated dramatically with President Trump threatening 100% tariffs on Chinese goods if they retaliate against U.S. measures. Third, New Zealand's GDP growth slowed to just 0.2% quarter-over-quarter, missing expectations and reinforcing the case for further monetary easing. These developments have created a perfect storm for the Kiwi dollar. The Reserve Bank of New Zealand's aggressive 50 basis point rate cut has significantly impacted the currency. Governor Adrian Orr emphasized that inflation is now below the 2% midpoint target and economic growth remains subdued. The RBNZ signaled that further rate cuts are likely in the coming months, with markets now pricing in an additional 75 basis points of easing by mid-2026. This dovish stance contrasts sharply with the Federal Reserve's more cautious approach, widening the policy divergence between the two central banks and putting downward pressure on Nzd/USD. Escalating U.S.-China trade tensions pose a significant threat to New Zealand's export-dependent economy. China is New Zealand's largest trading partner, accounting for nearly 30% of exports. President Trump's threat of 100% tariffs on Chinese goods, if implemented, would likely trigger Chinese retaliation and slow global trade. This would directly impact New Zealand's dairy, meat, and forestry exports. The uncertainty is already weighing on business confidence and investment decisions. Any further escalation could push Nzd/USD significantly lower, while a negotiated settlement would provide relief. Let's examine the key technical levels. Immediate support is at 0.5700, which has held multiple times in recent weeks. A break below this level opens the door to 0.5650 and potentially 0.5600. On the upside, resistance is at 0.5820, the 50-day moving average, followed by 0.5860 and 0.5900. The 200-day moving average at 0.5950 represents major resistance. For traders, these levels provide clear entry and exit points. Watch for price action around 0.5700 support, as a decisive break could trigger stop-loss selling and accelerate the downtrend. For the next 1 to 2 weeks, we maintain a bearish outlook with a target range of 0.5650 to 0.5750. The combination of RBNZ dovishness and trade uncertainty creates a challenging environment for the Kiwi. We expect continued downside pressure, particularly if US-China tensions escalate further or if additional weak New Zealand economic data emerges. Key events to watch include US inflation data, Federal Reserve commentary, and any developments in trade negotiations. Traders should look for selling opportunities on rallies towards 0.5800, with tight stop losses above 0.5820. Looking at the 1 to 3 month horizon, we see 3 potential scenarios. Our base case, with 60% probability, sees Nzd/USD trading between 0.5500 and 0.5600 as trade tensions persist and the RBNZ continues its easing cycle. The bear case, with 25% probability, targets 0.5200 to 0.5400 if tariffs are implemented and China retaliates. The bull case, with 15% probability, sees a recovery to 0.5900 to 0.6000 if a trade deal is reached and New Zealand data stabilizes. Monitor US-China negotiations, RBNZ policy decisions, and New Zealand GDP data closely. For short-term traders, consider selling Nzd/USD in the 0.5758 to 0.5800 zone with a stop loss at 0.5820. Target 0.5700 first, then 0.5650, offering a risk-reward ratio of 1 to 2 to 1 to 3. For medium-term positions, scale into shorts between 0.5750 and 0.5850 with a stop at 0.5900. Target 0.5500 and 0.5400. Risk management is crucial. Limit risk to 1 to 2% per trade. Use conservative leverage of 10 to 1 or less, and scale in gradually. Remember, trading carries significant risk. Always use proper risk management and never risk more than you can afford to lose. Thank you for watching this FXTech analysis.